Hello everybody, I'm Chuck Gibson. This is Taking Stock with Art Jarvis, a bi-weekly discussion on the local, national, and global economy, how it impacts your personal financial health and wealth. Now here's Taking Stock, episode number 75 with Art Jarvis. Welcome, Art. We have a lot to talk about today, my friend. How are you?
Yes, we do. I'm doing fantastic. How are you doing, sir?
I couldn't be better. I'll just throw this in. I'm about done with baseball because of the Reds. But went to the Reds game Tuesday night, and they beat the Mets. So that's pretty good. I saw them win a game.
Yeah.
So I'm not quite done with baseball.
I've been to one game. I watched them win.
We're good. Actually, I haven't been in attendance for a losing game for the Reds yet this year. Every time I've been there, they've won.
Well, see, someone should be funding your.
Well, I got to stop turning the TV on because every time I turn the TV on, they're winning, and then 2 minutes later they're losing. So I'm not bringing them luck.
Well, the game I went to with little Artie, that was the one. They tried to give it away in the ninth inning. They were winning whatever it was, 4-1 or 4-2, and they tried hard to give it away. It was looking pretty ugly there at the top of the ninth. So, but they pulled it out. So kudos to them. So.
Well, anyway, I was just going to say, I threw that in there just to say I'm doing great. I actually saw the Reds win last night, and so that was fun and good. And plus, that whole pizzas for strikeouts thing happened too. So we got a winner and get a free pizza. How can you do better than that?
Our friend at La Rosa's.
I'm going to go over and see Sam David at the Loveland La Rosa's. There's a plug for you, Sam. You owe me extra. But anyway, and we'll just, you know what? I absolutely appreciate the support of Jarvis Global Investments. It doesn't happen without Jarvis Global Investments. And then, of course, here we are live with Art Jarvis himself.
Yeah.
As I said, this is Taking Stock episode number 75, and we're going to tell you everything that's going on and how it impacts your health, wealth, and personal financial goals.
I think the statement was made at the end of episode 74 that the next one would probably be pretty interesting. And guess what? Here we sit.
Oh my gosh! Yeah, we were. It was. I love to use this word. We were on the precipice 2 weeks ago.
Yeah.
The precipice 2 weeks ago, and we knew things were going to just continue to be.
Yeah. I mean, I had no idea.
Volatile is not the right word, though. I mean, it's been roller coaster. But would you call it volatile?
Yeah, it's all a level of volatility. Sometimes it's more volatile. I would call. We've gone from 7,300s. We got up close in the ballpark of 7,600 again just the day before yesterday. The day before yesterday. And then today, we got the Fed announcement and all that good stuff, and we're back down to 7,420. So, I'd call that a little bit of volatility, sure.
Well, you know what? And in the interest of full disclosure to our listeners, all of our listeners, bunches of them, everybody that listens to Taking Stock, we want to let you know that this episode of Taking Stock is being recorded after the bell rang on Wednesday, not Tuesday like we normally do.
Right.
Unfortunately, yesterday had some other things, including a funeral of a friend. So we had to postpone the recording of this episode to Wednesday, and we've passed the 4 o'clock bell. Yeah. On Wall Street, I guess.
Well, it's working out in our favor because it's given us a lot more to talk about than we would have had if we did it yesterday.
So where do you want to start us off?
Well, I think
you touched on the S&P and nearly 70. It was 75, 65 yesterday at one point.
Yeah, very good.
Then today you said where'd we go today on Wednesday?
Yeah, so we dropped. Everything was fine. We were actually up most of the day. We spiked a little bit, and then the Fed announcement came out at 2 o'clock that they weren't going to do anything, which they didn't. They didn't raise rates. They didn't lower rates, which is not a surprise. But then as the day went on, you got to see what the Fed released. The Fed statement was released, which, interestingly enough, that a lot of discussion about the new Kevin Walsh coming in and being the Fed chairman, that people are all worried about transparency. So 2 things have happened. One, April's statement was like 340 words or something like that. Today's statement was like 140. So, I mean, and they release a statement and they redline everything. They make it red, and then they put a line through everything that was taken out, and then you can see what is still there or what's new, right?
Okay.
There's a whole lot of red and a whole lot of lines going through the red in this statement. So they took out a lot of what they would say, so which is going to put more importance on when he actually gets in front of Congress and makes his quarterly report or whatever. The other thing,
which is coming up.
Yeah, good question. Soon.
Yeah, because we're closing in on the end of calendar year.
Yeah.
Second quarter.
Yeah, he's going to have some fun when he has up for that.
January, February, March, April, May, June.
Yeah, so it's
a couple of weeks
probably
away.
in July.
Yeah,
probably. The other thing is and we've never talked about this before, but there's what's called the dot plot.
Right.
So that's a anonymous way for the 19 Fed governors, Fed chairmen to literally put a dot on a plot and say where they think interest rates are going to be and where we think we're going from an economic growth standpoint. So interestingly enough, today, 18 out of 19 Fed governors put their dot on the plot. So two things. One, someone didn't put their dot on the plot.
Well, again, you used the word anonymous.
Yeah.
But you feel pretty strongly the person whose dot didn't get put on the plot is somebody whose initials might be KW.
Yes, I think if we put a chocolate malt on the line, a chocolate shake, actually. Sorry, I'm not a big fan of malt, but too much information. If you made me bet, I would bet that it was kettle wash.
So if I lose the bet, I'm buying you a chocolate shake.
Yeah.
If you lose the bet, you're buying me a chocolate malt.
I'll even ask them to put extra malt in there for you if you want.
That'd be great.
Yeah, there you go.
Okay.
But so it doesn't. So there's another indication of that some of that transparency is what's the word, trickling away.
Well, so here's the question. That's not a good thing. I mean, the prediction was, Trump's new guy, Warsh, is Trump's new guy, and so we're going to lose transparency. That was, no, we're going to be transparent as ever, and I'm my own man. And so now, wait a minute. And you're saying some indications right now say that maybe there is going to be a little less transparency?
There was less transparency today. Let's put it that way. Now, whether that's a good thing or a bad thing will remain to be seen. I mean, don't forget, I'm interested in what they have to say. I'm still more interested in the economic numbers. Okay, they have a lot more that they look at. And it's still interesting to me. But so one person's missing from the dot plot. So is that the end of the world? Definitely not. But here's the interesting thing is what the ones who did put an indication on the dot plot has changed from a rate decreasing or a rate cutting bias. Now we have a rate increasing bias, which is a complete change. So they're talking about potential for a rate increase in 2026.
So this board of governors. One of the board of governors is the outgoing Powell, who stayed on the board of governors.
Yes.
All right. He didn't, though he's not the chairman anymore. He's still on the board of governors.
Right.
But other than that, the new chairman being Warsh. Other than that, the board of governors is the same group of people that Powell was the chairman over.
And Warsh is basically the new guy.
That's it.
Yeah.
And so the fact that it swings to an indicator of a rising interest rate, an increase in interest rates, what the heck changed?
Right.
Listen, I'm asking you, but anyway. Yeah.
So here's what's changed somewhat. Again, I think I was pretty straightforward that I really didn't think we needed to cut rates 3 times last year. So I think that's changed a little bit. And the Iranian war has changed things. Whereas we've been talking for 3 years how the Federal Reserve has been trying to get inflation down to a 2% target. Okay, they got down to 2.5, 2.7, so they were heading in the right direction. But we made the comment that it's going to be a lot harder to go from 2.5 to 2 than it was to go from 9 to 2.5, right?
Sure.
So, but now here's the problem is with the Iranian war and with the increase in fuel prices and groceries prices and things like that, now, especially if you're looking at the wholesale, the producer price index numbers, they have jumped up into like the 4.2, 4.3 level. So number one, we're not even close to 2% on the producer price indexes. And then the other thing is we're moving away from the target. So is that conducive to being in a declining rate environment? No, not at all. And so you and I were talking offline before we started. You hear realtors and people telling you just go ahead and buy the house and you can refinance in a year or 2 or something like that. That's not a foregone conclusion, okay? It's okay, so I buy whatever the number is, a 6.25% 30-year mortgage, and my expectation is that I'm being told a year from now rates will drop 1% or so that would be an opportunity for me to refinance, right? That's not 100%. In the bag. So that's a problem. But
not the strategy you would recommend to a home buyer.
No, I mean
especially a first-time home buyer.
We've been in decades of people buying houses that they can't afford. Let's be clear about that. Now they were lucky for a long time that rates kept decreasing, and that helped them out substantially. But then now we have a younger crowd over the last 3 years that have all of a sudden decided they wanted to buy a house. Well, they waited until rates went from 3% to 7%. And they also went from, the average house price went from $200,000 to $400,000. So their cost of debt's more than doubled, and the cost of the house is more than doubled. So, they're on the hook for a big number, and you see a lot of younger people going way on the outskirts of town to be able to afford a house.
Well, are you seeing? Because what that said, like with the price of borrowing having increased for them, and then so the price of the mortgage, and then the price of the home essentially doubling as well. Then the question is income versus. So, are you seeing a trend right now where inflation, especially just the real estate picture of that right now, is outpacing the income?
Sure.
For the average Joe.
No, I mean
that's something I wanted to ask about, because that's something I've been hearing about over the last couple of weeks. Yeah. That is potentially a concern for the consumer, is inflation is outpacing wages.
Yeah, pick the time frame, but let's just say you look at the last 3 years or 4 years or something like that. If a new home has gone from $250,000 to $400,000, people's income had not increased that much in the last 3 or 4 years. So yeah, it's definitely difficult, and I don't know. I just think, again, I keep using the phrase young people because I think they're really out there. If you're sitting at your house and you've got a 3% 30-year mortgage, guess what? I'm good, right? I'm not in a hurry to do anything. I'll keep that mortgage and I'll just keep taking that extra money that I might put down on it and put it in the stock market. But it's definitely and then on top of that, then now you take, I now bought a house that is way more expensive than I would have paid for it 4 or 5 years ago. My interest rate is way higher than it was 4 or 5 years ago. My fuel cost has gone from $2 and something cents per gallon. Today, just call it whatever you want to call it, $3.30 a gallon, but it was at $5.25 a few weeks ago, and I got to go to the grocery store. Guess what? I still have to eat. Well, the groceries aren't getting any cheaper either. So, there's a lot of pressure on people these days. That's a very, very long way of saying, look, we're in an interest rate environment, we're in an inflation environment, we're in an economic environment that is not indicative of a decreasing Fed funds rate or something like that, So, who knows what goes on. And the other interesting thing is
an increasing rate will help, I don't want to say slow the economy, but it slows the inflation rate, supposedly.
Theoretically.
That's what I'm saying.
But that's the problem. We're looking at higher inflation numbers right now, but we're also looking at an economy that it's still growing, I think, that's still growing, but it's not growing at near what the rate it was. So now you got that stagflation where it starts to creep into conversations and things like that. So you got to keep an eye on it. So, but the good news here in the last week, hopefully it follows through, is hopefully we've got to deal with Iran. Oil prices have gone from whatever, just call it $100 a barrel 2 or 3 weeks ago. We're down below $80 a barrel now. So that will help. Hopefully we get that oil flowing again, and we can get that, if we can get oil back down into the $60 a barrel, 50 something dollars, that would be fantastic.
You saw the elephant walk into Studio A and address the elephant in the room immediately. because again, while you're talking about the increased interest rates that are being paid, the inflation rate being what it is, the higher gas prices, the higher grocery prices, consumers are facing those pressures that you just mentioned. But again, that elephant came busting through the door as you were talking about it and said, well, wait a minute, what about what's happening right now that may reverse that trend? And we have seen it. It's been an immediate impact at the gas pumps for us, and a very favorable one over the last, week. It's interesting. Who knows? Again, things have to finish in Iran, specifically, and then that might settle. But it's been such a fluctuating thing. But again, at least it's not $5.25 a gallon at the gas pump. The egg prices. Everybody's talking about the egg prices. Well, the egg prices have dropped to a more pre-egg price increase. They were going through the roof. They've dropped back to a realm, just kind of like the gas is back in the $3 range. The egg prices have gone back a little bit. But we've talked about this many, many times. The sad thing is the inflation rate. That number is the number that says at what percentage or whatever that it's still increasing. And the darndest thing is, while we do see gas prices fluctuate and go back to previous lower levels, I'm not seeing that with my cornflakes.
Right. I haven't bought cornflakes for a long time.
You know what? And just to be, again, in the interest of full disclosure, Chuck isn't even thinking about the corn. I'm not seeing that in the price of my steak. I want to get some beef at the grocery store, and it's just out of reach.
They were very straightforward at the beginning of this year that meat prices were not coming down, and they were more than likely going up, and that's what's happened. If you go buy a steak, you better get a good one and enjoy it, because it's going to cost you. So. It's just, you're right. So the lower gas prices, that's a good thing. Okay, how good is it? That remains to be seen. But it's a lot better than $4 gas prices. Let's be clear about that. So hopefully you'll see that trickle down, and we've had service charges, we've had fuel cost charges. So if we start to see those drop back off again. If I'm paying a bill and it's got a gas charge on it, I'm going to make a phone call and request it be removed, because they put it on at $4 or $5 a gallon, and now we're at $3 something. if that's going to stick, then there's no reason for there to be a fuel charge on there. So,
right.
Here, one last point on.
That's a great point though, because people forget about that.
Yeah.
That there have been fuel and surcharge things added. So anyway, get back to you, Max.
I just wanted to make one last point. The only other thing that was interesting, and it actually is, I was kind of pulling in your driveway at Studio V.
Which, by the way, we have a surcharge for your.
Does it? Gosh. And the guy hit me for an extra $1, the parking attendants. I saw that. And that's another whole story if you want to talk about fast food and stuff. But so that might be the next show. But so one of the last things I saw before we started recording here was Kevin Walsh made the announcement when he was talking to the reporters and everything that he is instituting a federal tax task force. I can't talk to that. Sorry.
Well, that's hard to say. Task
force. A task force to look into the Federal Reserve and potential changes at the Federal Reserve. So guess what that does? And we saw it here as we were talking. The market was down 0.5% or so, and then all of a sudden we're down 1.25%. So by the time we closed at 4 o'clock, so guess what? More uncertainty. What does that mean? I mean, I don't even know what that means. What's he going to do with this task force, and what does that mean for the Federal Reserve and things? So Alexander Hamilton is not going to be happy. Let's be clear about that. So, or Thomas Jefferson or whoever, they spent a lot of time on the Federal Reserve.
Man, you really threw me off when you threw out Alexander Hamilton right there. I was like, I didn't expect to hear that one.
Well, I went to the play, so I got a refresher course. But yeah, so anyway,
we'll talk more about that off the air. But anyway, go ahead.
Well, let me throw that out there. There's another level of uncertainty as to what does that mean exactly. What are you going to do? What are you going to do with the Federal Reserve, or what is it you want to look into and things like that? So, so add that to the list of things, and I'll just touch on this real quick. The funny thing to me is now there's a whole bunch of discussion about McDonald's potentially charging you an extra $1 if you go through the drive-thru. I'm like, what? I thought you wanted.
I'm the one that's burning up my gas. Why?
I thought you wanted me to go through the drive-thru, right? And you didn't want me to come in. So we'll see. I'll just throw that out there. That's a teaser.
Well, the drive-thru requires an employee.
Well, at the moment it does. But do you know if you go through the drive-thru and let's say you order it on your app, it actually has AI and it has voice recognition now, and I can say. It'll say, "Are you going to use your app today?" You say yes, and my order number is LA17, and you could hear it switch over to a automated voice saying, "Thank you, Arthur. Please pull forward to the first window," or whatever. So, guess what? It's already at least part of it is being taken over by artificial intelligence and less people. So we'll see where that goes. But I got a funny feeling that if they try to charge you an extra $1 going through the drive-thru, it's probably not going to go over well.
Well, let's take. We're coming to the close awful fast. We got about 5 minutes to wrap up for episode number 75 of Taking Stock. Recap, because there was so much to talk about today, and I bet you we didn't cover half of it.
No, there's plenty to talk about.
What are some things that, if you were going to recap the last 2 weeks, that have been highlights or lowlights in the economic news?
I think the big thing is trying to alleviate some of the concerns, right? So a deal with Iran.
Right.
Theoretically a good thing. I'm not saying it's not going to be a bumpy road going forward, but and associated with that, you actually had interest rates come down, and you also had the price of oil come down. Now, with today's Federal Reserve announcement, the rates actually popped back up a little bit. Nothing crazy, but it did move back up. So, I mean, that's the big. It's always about getting rid of some concerns, right? You try and get rid of concerns so you can, the less things you have to worry about, the more, the other things you can focus on and things. But, I think that's a big thing. Corporate earnings are still fantastic. And, the interest rates have moved up, but they we haven't gone from 4% to 5% or anything like that. We've gone from 4.25% to basically 4.5%. So I mean, it's 0.25%. It's a little bit of pressure in the wrong direction, but it's nothing crazy. So we need to, as always, we need to keep an eye on the consumer. That's all there is to it.
Yeah.
We have to keep an eye on the consumer, and one, are they spending, and two, where are they getting their money to spend?
It's summertime.
That's the question. Yeah.
I thought, it's summertime. Mm-hmm. Are we going to experience what you would say is the typical average economic summer? Or is there going to be a lot of economic news throughout this summer? Which, this is supposed to be where things settle for a while. Everybody goes on vacation and stuff like that. They're all in the Hamptons.
Yeah. Right. Not all of us.
Why? Yeah, you and I are just looking for wood. We're looking for Woods Cabin and Babbling Brook.
Pretty much.
Yeah, but anyway, hey, I did want to throw one other thing because we've been talking about Iran, and I probably have said something along the way. Certainly, I know you and I have talked offline, but the grandson, who's in our United States Air Force,
mm-hmm. Right.
and who was in the Middle East before it started, mm-hmm. and throughout the Iran war since, came home.
Oh, yeah?
Safe and sound.
Good.
Stateside as of last week. And
Good.
so just wanted to throw that out to the listeners and to you that we, so.
Yeah, good.
Grandson's home safe and sound, and of course he's not allowed to talk about it.
Right, exactly.
But he's here.
Yeah.
It was just a great reunion.
Yeah.
You tear up. But anyway, so I threw that in
you
because
did him for his service.
I appreciate that, and we appreciate the prayers that were sent out
mm-hmm.
for him and for all of those serving in the military and that got caught in it. He was ultimately he was in Qatar.
Oh, really?
And 8 months.
Yeah.
But back home, safe and sound now.
Good.
And because of that, so I find it interesting how these things work, and I don't know much about it. But before he left on the deployment, and of course the deployment preceded the start of the war. But before he left, he said, "So what's the deal after your deployment when you come home?" He said, "I'll get like 2 weeks leave." Well, anyway, it turned into the war, and it got extended longer than he expected. He was there 8 months, so he comes home to a 6 week leave.
Yeah, good.
So he's a little happy. He's a happy little booger right now.
Yeah.
But
6 weeks will go quick.
Yeah,
that's for sure.
No doubt about it. But anyway, the reason I wanted to throw that out is the idea that there's troop movement
mm-hmm.
home maybe tells us a little bit about what's going on beyond what's being reported.
Sure.
The hopefulness of bringing this to a close, and hopefully more and more servicemen will be back here,
yeah.
back stateside, back to whatever their military routines are, which that's not to take away, but being in the war zone, so to speak, is a whole different animal for sure.
It's a lot of stress on a lot of people.
But it would be interesting to see if that plays out to, relax some of the uncertainty and help boost, hopefulness in the economy going forward.
Yeah, I mean, as always, it's going to be interesting to watch, and guess what? There will be something else that pops up that we will get to talk about. So whether it's self-inflicted or has to happen systematically, it's worth. I mean, again, for me, between the consumer and inflation, I think those are the two things we have to keep a close eye on. So.
Well, I made a note of that. Consumer watch is key over the next. For us, over the next 2 weeks before we come back on the 30th of June, Art.
Yes. Wow.
But, and then you and I have to talk about who's taking vacation when and how that impacts the next taking stock.
I do have plans to get out of Dodge once or twice. We'll have to figure that out.
Likewise, we'll figure it out. But for the listeners, number one, thank you for listening again. And we will be back with you with the next episode of Taking Stock, episode number 76. We'll be back to our regular schedule, Tuesday, June the 30th, I believe. I hope. Should be a regular, we can get back to some normalcy for us.
Yep, sounds good.
For you, Art Jarvis, thank you so much.
Pleasure's all mine. I appreciate you. Thank you.
It's not all yours. I get as much pleasure out of this as you do.
Do you? Okay, good.
Yeah,
Go ahead.
I learn. I want to keep learning. But for now, that is the end of Taking Stock, episode number 75. And again, listeners, thank you for joining us. Art Jarvis, thank you for taking the time to share your insights. And we will be back with you on Tuesday, June the 30th. Until then, I'm Chuck Gibson, and that's Taking Stock.